We got to talk about a massive bankruptcy in the real estate space. We got to talk about mortgage rates hitting a 20-year high. And of course, we need to talk about today being the day that we officially hit 50,000. Yes, folks, Friday, August 18th, 2023 will be known as the day that one rental at a time hit 50,000. If you don't know already, I am celebrating 50,000 by giving you, yes, you right there, two free amazing gifts. You can go over to my new channel, The Daily Financial News, and watch two amazing events. One, The Legends of Real Estate Investing with four amazing ladies. We have former Section 8 housing. We have a teenage mom. We have moving to a new city to start investing. And of course, we have somebody who had a year-long flip, also known as Anna, April, Casey, and Alicia. And then, just because I know you like the four Avengers, Millennial Mike, Dion Talk, Lumberjack Landlord, and I gave you that. So you have 7 hours of free content to go watch. Used to cost you $100, worth $1,000. I'm giving you two for free as a thank you. Again, go to the new channel. Let's talk about just a gigantic bankruptcy, folks. Remember that company we talked about, Evergrande? Seems like 3 years ago. Well, on Friday, they officially declared bankruptcy in New York court. Yes, folks, China's property giant Evergrande has gone kaput. They are now bankrupt. The Chinese economy is faltering. The consumer, right? The consumer drives the economy. The consumer has lost faith. The consumer in China holds their wealth in real estate. They don't really have a pension system and Social Security and things of that nature. The property is their pension. It's not good. We're going to see more failures over there. And again, the pain is just beginning. The Chinese economy, actually, Lance Lambert and I from Fortune, we riffed on this topic last Thursday. You can watch his playlist. It's just called Lance, and really talk about us going through the Chinese real estate market, the Chinese consumer, and things of that nature. There's a lot there to talk about. So next, not only Evergrande, but we talked about WeWork a lot. I don't know, 3, maybe 4 years ago. And it looks like WeWork just did a reverse stock split, folks. We're not talking a 2-for-1 stock split. We are talking about a 1-for-40 stock split. Think about that. 1-for-40 stock split. Again, not going the right way. This whole return to office thing is just not coming. Let's talk about the housing market and where, with rates so high, where it might be going. The CEO of Redfin is basically saying sales volume couldn't be worse. High rates are hurting the buyers and the sellers. This is something you and I have been talking about for quite a while. Everybody talks about demand, but there's the other side, supply, and that's what people are missing. There's now talk of an 8% mortgage rate. Frankly, a lot of you watching this, if you were going to buy an investment property, you would be in the 8s. Remember, cost of capital means very little to us. It's one variable in a spreadsheet. You're simply writing lower offers. A high interest rate removes competition. It also allows you to find motivated sellers. This is what we are talking about on this channel. Write disrespectful offers. Follow up, follow up, follow up. These are the times to do the work. Let's talk about some earnings that we had on Friday. We had Applied Materials, beat top, beat bottom. Ross Stores, beat top, beat bottom. Palo Alto Networks missed revenue, but did beat earnings. Bill.com beat, but had weak forecast, as did Estee Lauder, beat, but had weak forecast. There's one that I'm looking at specifically, Farfetch. Not because I know anything about Farfetch, but because of the market that they serve. If you don't know who Farfetch is, they are an online luxury retailer. Online luxury retailer. They had a huge revenue miss and a weak forecast. So I ask you, is this just the aspirationally rich that used to flaunt and be stimulus ballers pulling back? Are the rich pulling back? I don't know. To me, again, a wild guess. It feels like the aspirational rich are pulling back, which is to be expected. Also, I think we're seeing some of this in the fancy watch market with Rolex and Patek and all of those things. People are starting to realize that they need to raise cash, and they are selling them. Mortgage rates are at a 20-year high. I think 7.37 was the Friday reported number. This is the cycle peak. They could absolutely go higher. GDP Now is forecasting a 5.8% current reading. I do expect that to go down, but the recession's not starting in Q3 of 2023. Lastly, folks, let's acknowledge what you and I have done together over the last 5 years. We have produced 11,000 videos. 11,000 videos. That's wild. You know, that's pretty crazy. Averages 5 videos a day. We've done 13.6 million views, and of course, 50,000 subscribers, folks. Again, I want to thank you for being part of the 50,000. Please go to the new channel. I will leave a link below so that you can find these 7 hours of free material. And to be clear, I need 300 of you, only 300 of you, to watch the 7 hours, and we will get to the magical 4,000 watch hours. Thank you for being a part of One Rental at a Time. You're amazing. Take care.